All right, so I just wanted to make this quick video on Apex Technology Acquisition Corporation, APXT, and their merger with AvePoint. I wanted to talk about the risks involved in this because there's a lot of hype on the stock right now. It's the latest hype SPAC stock, and I see a lot of people saying, oh, it's going to get to $20, oh, it's going to get to $30, but I think a lot of people don't really understand what AvePoint does. Now, AvePoint is a great business. They have great clientele. They have great revenues year on year. The management team looks good. It's a profitable company, but I don't believe that AvePoint is a high growth company that people are comparing it to. So I've seen comparisons to Cloudflare, Fastly, Snowflake, and you can't really compare it to this. Now, if you had bought this stock a week ago or before Friday last week around the $10 to $11 price range, this is when it had a market capitalization of around $400 to $450 million, which is not unreasonable. But with this latest run-up, the stock price has gone from $11 to $14.20 with an almost 30% run-up. Now, the risk that I see in this is it now has a market capitalization of $632 million. So I'm going to explain a little bit about the risks that I see if you buy into this stock now or if you bought the stock on Friday. Alright, so as I mentioned before, the market capitalization is now around the $632 million mark. Now, why this is a problem is because the post-transaction ownership is valued at $1.989 billion. And the Apex public shareholders will own 17.6% of that. So if you had bought around the $10 to $11 mark, that would be almost in line with this valuation. But if you buy now at the $14 to $15 mark or even higher, it's very risky because if you take that $1.989 billion and we get 17.6% of it, this shows you here that it's $350 million. So basically, to get to where we need it to go with this market cap, you would have to almost double this valuation. So if all these guys and advisors, they value it at $1.9 billion, I think it's reasonable to say that the company is valued at close to this $2 billion figure. But to get to where we are with this figure here, the company would need a valuation closer to $4 billion. So, as I mentioned in the introduction, AvePoint is a great business. They have great revenues. The revenues are growing year on year. So, even if you did buy this, I think eventually it would get to $4 billion. But people are not, I think people don't really understand a lot about AvePoint. So they are essentially a Microsoft reseller. And I'm sure they've got great technologies and services, but they do not have the unique intellectual property that companies like Cloudflare have, for example. So what they are doing is they are providing services for corporations and businesses to better utilize Microsoft products. Now, I don't know 100% for sure what products and technology AvePoint have that they've developed themselves, but all I see when I look through their product lists and their reports are things referring to Microsoft 365 and Microsoft Cloud, and it's great. That's a great business to be in. And in fact, I used to work in IT for a Microsoft partner doing similar, providing similar services. And it's a great niche to be in. It's a great company, but I don't believe it's, all this hype is very risky. So if you look at some of these other companies that they said are, their peers, they are saying here, so like HubSpot, for example, it has a 13.6 times valuation based on the estimated revenues from 2022. And they've given very low valuations, which is quite generous. But let's say we went with like a valuation like HubSpot. So if we took 13.6 times revenues from 2022, which is estimated to be $257 million, that would be $3.5 billion almost. So basically, my point being is, this is what they value the company at currently. I'm sure it will grow. There's great management. There's going to be great management and connections, I think, coming from Jeff Epstein in particular. So I do believe in this company long term, but I don't believe the current run-up is very healthy, considering that whoever owns this stock, you guys are only going to get 17.6% when they finally merge together. So, take it as you will. I could be wrong. Do your own research. Do your own due diligence. Come up with your own conclusions. This is not financial advice. I'm not a financial advisor. I just thought I would share my thoughts on it. And I could be wrong. Maybe... I personally, I would have loved to invest in this company, when this news first came out. But of course, you had to know and be watching it and familiar with it rather than find out about it on Reddit or some other channel. By the time someone posts about it on Reddit, it's already too late. And you still might make money because, in this day, there's so much hype and these stocks get hyped up. So even though there's no, it's way overvalued, there's still a chance to make money from the, all the hype behind it. But if you want to make, safe investments, I would not, I would really be waiting for pullbacks because I don't think this is sustainable. Anyway, I could be, like I said, I could be entirely wrong, and that's just my take on it. And I saw a lot of hype videos on it and how great AvePoint is and how great the management of Apex is. And I agree somewhat, but I think the run-up is a bit too, it's a bit too much. I think you missed the boat. The train's already left.